This is another case study for the 23rd of April. I just did one for gold and I thought I'd do one for the euro dollar as well. And I'm just doing it right now exactly after it because it applies to trading hours. Now, if you take a look at, first of all, in the members area, what we have is for this week, which was posted on the 2nd of April, as you can see, we have gold Monday, Thursday, and we're going to look at euro dollar now, Monday and Thursday. And you can actually find the case study for gold in the members area. But let's take a look at euro dollar. Now, euro dollar Monday, Tuesday, red, draining, so not very powerful on Monday and Tuesday. Wednesday, Thursday, strong up move, tops. Friday, routine. Okay, so today we're on Thursday, and what we have here is, look, this is Thursday, all right? So Monday, Tuesday, we're a bit drained. Thursday could be a strong day. Okay, so we could have a up move, and then Friday we could follow that move. So we already know what we could be doing, right? So we already have a bias, we already have some kind of a plan according to this. Also, something very important is I have here swing days periods, which you obviously not seeing, but let me put it here, right? This is very important as well. Whoops. Swing day periods. So let's make this a little bit bigger, all right? And this actually, the information here actually tells us how long a certain move can go if it starts at a certain day. And on this, for this week, I'll just show it for you because I just recently started putting these up, and as you can see, it's for the period of April 20 onwards because I just started doing it. Obviously, if you're a member, just make sure you read all the information. And this week for us is important in terms of dates, and as you can see, 20th of April is what I'm looking at here. All right, so 20th of April, we've got a 13th of April start date, 20th of April, and where it could end up is 27th. Obviously, it could be a weekend here as well. If it's a weekend, you're going to have to mark it into Friday, all right? Because I think one of these is lands on a weekend. And 27th, for example, is going to be Monday, all right? So obviously, I want to be looking at Friday and so on. So if I know these days in advance, then I can say, okay, you know, if I start on the 13th, let's say, let's take a look at the 13th of April, for example. 13th of April is here, all right? So that made a move here all the way into the 20th here, all right? And on the 20th, as you can see, markets started to sizzle down, all right? Now, the next day, if you take a look here again, so what we're looking at here is the 26th, right? And the 26th is going to be, let's see what day that is. It's the 23rd today. So 26 is going to be, as you can see, it's a Sunday, right? So Friday, I want to make sure I'm kind of like out of that trade because it's probably going to end its direction and so on. So Friday is tomorrow, and we've got a trading day Thursday. So what are we going to do? Well, first of all, as you know, with the euro dollar, what I'm looking for really is for the market to come down into this zone. All right, and if it comes down into this zone, in fact, let me get rid of all this mumbo jumbo. All right, that's much better. I actually like to draw my lines manually. And these green boxes are mine, all right? So these are all manual. These are demand and supply levels. So what I want to see actually is to see the euro dollar down here, all right? As you can see, there's a zone I want to fill in here, and I'd like to see it down here. And from the previous window, if you go to weekly market timing, you'll have the vector days for this week. And the vector days, which we looked at, you see Wednesday and Thursday strong, up tops, okay? So we want to see where we're heading, and if it's an up or a top or it's a strong day, I might want to turn around. But how I want to turn around, I don't want to turn around until price meets time. If price does not meet time, I don't want to enter the trade. So what am I really looking for? I'm looking for a trade day. I'm looking for an intraday trading window at the right price. Okay, and if I have a vector day on that day, great. If I have beginning, peak, or an end date with respect to the trend days, great. Those are all additional things, but that's what I want to have. But let's say I made a mistake and I did a boo-boo, all right? And let's take a look at what that boo-boo, not booby, but boo-boo would look like. So this is the 15-minute chart. So if I take a look at the intraday timing for Thursday, which is here, I'll be looking at where I can trade at the right price. So suppose I made a mistake on the price. Let me tighten this up a little bit. This is why trading this is really, really nice and easy, simply because I can't do that. Okay, fair enough. Let's do this. Let me see if I can tighten this up a little bit. All right, so let's do that. Let's tighten this up a little bit. All right, so let's say I made a boo-boo, right? I made a mess of things. And I said to myself, you know what? I'm going to go long because it's a trading day today and the market is down. Despite the fact that this is a zone where I really want to get in and buy. But because we're intraday trading, it's not illogical. It's actually logical for me to go up on Thursday or at the end of Thursday on Friday to go long, because then I can expect to come down here. The markets really, you know, they come down, they go up, they come down, they go up. So they're waving all the time. So I just have to do something a little different. If the daily price is not where I expect it to be, but I want to kind of like go long because the trading day means high probability day for us. So high probability day, I want to take the trade, and then I'm looking for where I can take that trade. And all I have to do is put in my timelines, right? So let's take a look. This is UTC +3, by the way. So let's say 12 o'clock, 1:55. Okay, it's my lunchtime. 12 o'clock. Let's see, where's 12 o'clock? This is 12 o'clock. You see the market falling down exactly at 12 o'clock. They've got 1:55. 1:55. Market buying right there. Okay, so that's pretty good. Okay, and then expect disruptive moves as we get to next Thursday, next hour, 5:35 to 6. So let's take a look at 5:35 to 6. 5:35 is going to be there, and 6 o'clock is just going to be 2 bars away. It's a 15-minute chart, and it's UTC +3 at the moment. So as you can see here, we already have, let's get rid of those. Okay, the market really at the right time coming and going. All right, and obviously we've got the targeting here. All right, and so on and so on. If you wanted to, let's say you were trading the Asian hour. All right, let's get rid of these, and let's take a look at the previous hours as well, right? So the previous hours were 6:30 to 7 and 1:55. So 6:30, 6:30. This is 6:30 here. All right, 6:30 to 7 o'clock, and that's just 6:30 to 7 o'clock. Now you could say to yourself, you know what? They bought here before, so I'm gonna buy. Okay, and if you wanted to scalp the market, you could. Why scalp the market? Because your first target is pretty close by. It's very close. So you can do like 1 to 2 because you're going to put a stop loss right under the low. All right. So this is, for example, here. This is the low. All right. You're entering at the next bar. That's your stop loss here. So you need to take at least 1 to 2 on one trade. And then that's how it is. All right. Then you need to get out here as soon as you take 1 to 2. Why? Because that's the closing off yesterday, opening off today, and that is previous week's low. All right. So the market's already bearish, as you can see. But if you wanted to scalp it, it's a trade day. You want to reverse. You want to do it at a trading hour. But your first target is pretty close. If you're going to take the risk, you lower the volume You got your target, make sure it's 1 to 2, and you just do it. The beautiful thing about this is you're prepared in advance because you got the hours. And here, look, the market is, as you can see, turning around. So immediately at your trade hour here, you see the market flop, and the market just keeps going down to the next hour. So then all you have to do is just really basically just, just follow through. All right, so now you're here. The next hour, this is your entry here. Now, in a situation like this, what if you don't have a low? Well, you got a target, so you're going to target this again, all right? Or you're going to target this zone where they sold off before, all right? So if you're doing intraday timing, let's get rid of that because my drawing sucks there, all right? But if you think about it, all right, so this is where the market sold off, all right? That would be the bar you targeted to manage your trade or to take profit. Okay, so then if you enter here on this bar, let's say that's your entry, that's your target, and make sure your stop loss is going to be at such a place that that's going to be 1 marking for a double, all right, or 1 to 3 even. Because you're using time and price, your stop loss is going to be very tight. And that's really beautiful because your risk is very minimal. And if you're going against the grain, like with these moves, why? Because the euro-dollar isn't really where I want it to be on a daily time frame. And for me, the daily time frame, like I said, is important. It's not there. But if I do want to trade it, because the trade day and the market is down, then go for it. Same thing here. For example, the market came down here and we said, you know what, it's down, it's a trade day, let's just go for it, okay? And as you can see, that worked beautifully all the way into this zone here, all right? And from here, we said we could sell because trading days from last week. And then Monday, remember for Monday, what did I say for Monday, Tuesday on the euro dollar with the vector days? I said red, draining, so it's weak, right? So if it's weak, yeah, I want to be selling off, right? So once we understand that the market is weak, like Monday, Tuesday, let's sell it off. And then now we're into Thursday, okay? And Thursday, let's say I do want to buy, which is not wrong. I'd like to reiterate again, it's not wrong because the market is down and it's a trade day. I want to buy, okay? But ideally, I'd like to buy it here where we can close the gap as well, right? But if it's not there, if I still want to buy, then I have to obviously wait for the right time. All right, the right times. And if I enter at the right time and price, for example, this price is an intraday price because they bought here. So they bought here, buying again. Okay, but I understand I have to scalp the market here because the first resistance is too close. You have to either move, stop, manage trade, take partial profit, do something. All right. And then the market, again, like I said, moves down. Now we're expecting this zone. So if you already marked your trade, which means you took profit or you moved your stop, you took partial profit, you managed the trade basically, then you can just let it go because you can now put your stop pretty much on the line and say, you know what, I'm going to wait till we get here. If the market doesn't go there, but comes back down here, closes this gap, you want to go again? Yes, you can. Yes, you can. It's going to be a tight stop loss again, so you won't be risking too much, but it is bearish, as you can see. So we've got a nice bearish move here. In any case, if the market does come down and you want to go up, and let's say you did make that mistake, that's fine. Sometimes we do make mistakes, but the risk is very, very low. All right, so I hope this case study also helped. If you're in the members area, also check the gold case study. That's really, really helpful as well. Have a good day.